Welcome to SIRA MCQ YouTube channel. Today we discuss advanced level A-level accounting paper 2024 last question, question number 50. This is related to long-term investment. What is the requirement? Look here. Identify the following for this machine: payback period. Yes, accounting rate of return based on the average investment. How can we calculate payback period? Payback period means how many years to spend to cover the initial investment using the annual cash flows. Okay, how many years to consume cover the initial investment from annual net cash flows. We use the annual net cash flow to recover the initial investment. Initial investment, there is outflow. We use the annual cash inflows to cover this initial investment. How many years to spend to cover this initial investment? Look here, there's information. A firm is considering to purchase an eco-friendly machine for cost 5,000. There is 5 million, no? 5,000. Therefore, I prepare a statement. What is that? You know, there is a estimated cash inflow and outflow sheet. In that time we write cash inflows. This is cash inflows. There are some cash outflows. After that, there is some years is there. 0 is a major year. After that, we can 1, 2, 3, 4, and so many years there. In that time, the cost is 5,000 is 5 million. No? Look here. The purchasing cost of this 5,000. I use this 1,000. 5,000, there is a rupees in 1,000. 5,000 is the initial investment. Like that, there is 0 year outflow. 5,000. There is a purchasing price. Purchase price. Next one. The useful life and residual value of this machine are estimated 10 years. The number of years are 10. Residual value is 400 respectively. 400 residual value is last year. There are 10 years, no, there are years is there. After that, I prepare the 10th year. Okay. 10th year, the residual value 400 is cash inflow. This is the residual value. Next one, residual value. They said this machine is depreciated on straight line method. The expected annual net cash inflow from this machine is 625. Okay, the expected annually all years without except 0 year expected annual net cash inflow from this machine 6,250. There's annual net cash flow is every year 6 to 5. There's net cash flow, no? There is inflow within 10th year. Okay, there is a net cash, there is an annual inflow. Okay, next one is there. Enough. Okay, at that time we can finalize this. After that we can find the last answers. 5,000 outflow, 625 are equal to 5. There are some years there. 10th year 25. Okay, this is the estimated net cash flow. What is the requirement is there. First one is payback period. How can we calculate? The initial investment is there, the 0 year last answer. 5,000 was we invested to the investment. How many years to spend cover these 5,000 from annual cash inflows? Annual cash inflows are 600 to 625. There is a equal, no? Therefore 625 again and again. Therefore 625. How many 625 times should be meet in 5,000? Therefore I use the calculator to answer that. Look here, there is a 5,000 is the initial investment. I type it 5,000. In 1 year, within 1 year 625 was covered. After that there is a second year 625. Therefore 5,000 you should be covered. How many 625 times? Therefore I divide in 625. Answer is 8. 8 times should be in times 625. Therefore 8 means 8 years. Okay, 8 years. Yes, answer is 8 years. You should be cover the initial investment. Therefore payback period is 8 years. 8 years. Okay, in next one, accounting rate of return based on average investment. Look here, accounting rate of return, how can we calculate? Accounting rate of return, there is the same. This is accounting rate of return. This is same to return. This is same to investment rate of return. Investment rate of return. How can we calculate? There is a formula. Firstly we identify top of that average annual profit. Average annual profit we divide in average investment and multiplied by 100. Next one, how can we calculate average investment? We firstly identify initial investment plus residual value divided into. Okay, firstly we can find easily this one, average investment. Initial investment is there. Initial investment is 500. Don't think about the minus or deducting. use the 5,000 only as a plus amount. Okay, 5,000 plus residual value is in 10th year, residual value is 400. Therefore I add 400 divided into 5,000 and 400 is the answer. Divided into is 2,700 multiplied by 100. How can we calculate average annual profit? You know there is a annual is 1, 2, 3, 4, 5. Like there is a net annual cash inflow was 625. There's a cash inflow. We want average. This annual is same, no? 625. This is the annual cash inflows. We convert into profit. How can we calculate? You know there is a annual cash inflow. They are same, no? Therefore we can calculate 1 year. The annual is already a same in 625. Annual cash inflow was 625. There is a cash inflow. How can we convert into, we want annual profit. How can we calculate using this as a profit? Look here, annual cash inflows are not included depreciation. This is not included depreciation. Why? There's a cash inflow, no? Cash inflow, there is a depreciation is not a cash inflow. Therefore not included the depreciation in that cash inflow. Therefore how can we calculate profit? We include it. Therefore we included minus annual depreciation. After that we can calculate annual profit. How can we calculate annual depreciation? You know annual depreciation. How can we calculate? Cost minus residual value divided in useful lifetime. Lifetime. Cost is 5,000. Residual value is 400. Divided in 10. 406,000. There's 406,000 into divided in 10. 460. 460 is annual depreciation. You should deduct from 625. The answer is 5,261,165. 165 is annual profit. Annually equal 165. 165 divided in 2,700 and multiplied by 100. 165 divided in 2,700 multiplied by 100. Answer is 6.11. Answer is 6.11. This is a percentage. This is the answer of what is the answer? What is that? This is we calculated accounting rate of return 6.11%. Okay, let's see. We can write it easy. Accounting rate of return 6.11. This is a percentage. Okay, this is enough. This is the last question we discuss. In next video we meet another MCQ English medium paper in next video.